TGIF Warriors. How's everyone doing today? Everyone doing all right? See who's around. Alexander, Lydia, how are you? Brock, Brandon, Shahab, everyone doing okay? Let me ask you guys a question, all right? Do you look like this by Friday? Huh? Now, this was only a 4-day week. Huh? Do you look like that? Huh? Does it look like I worked hard? Okay. All right. Anyway, what I look like all the time. Well, I work hard all the time. I'll do a little bit more. This looks like a breakdown to me, guys, in the dollar. What do you think? Which was analogous to, euro getting through 110 and accelerating to the upside. I was a little surprised. Peter Goodburn, who's a dollar bearer, said not to get excited about, at our summit, he was very bearish a dollar and had him on this week. And he's saying I won't get too aggressive down here on a dollar breakdown. And I think the reason for it is, and it could be happening, is a top in the S&Ps 96. Okay, so what's really amazing to me is all the good calls that you make at certain points in the market, but they even look unrealistic to you. So when I was talking about this falling wedge down here and was looking at longs before we broke out at about 2400, uh, I was saying we could go to 3100. Does anyone know why? So, I mean, let's learn, and I have to learn the same lessons over and over again. But, I'm not the best at being a great holder anyway. I have too much of a trading mentality, but I could have just kept this bias. 100%, 100% retrace on a wedge. So down here, I was talking 3,100, and, got caught a good piece of this, maybe up towards 2,800. And ever since then, it's become more of a trading market, and I've looked for highs and short-term highs. But, sometimes you have to look back, and this was a pretty good call that it would fulfill the wedge. Kevin remembers. See, I'm not delusional. Midas. Oh, hi, Jess. Yeah. Anyway, I just want to cover a couple. Hey, Sinatra. A lot of my buddies from FX Street here today. I just wanted to go over the gold. Okay. So, looked like we had a false breakdown and it's coming back here. You know what's interesting? And how many people are here right now? All right. So, I could see that we could have a failing rally with the Dixie breaking down, and the euro, just to give you a simple measured move before I do the gold, was 110, 107 and a half, gives you about 112.50. Maybe we're even going for this, but it gives you 112.50 is just the arithmetic range of this. Or, and Greg was bullish. All right. Steve was bullish at 110. He needed to close over 110 to get bullish. I don't know why he didn't sound as bullish yesterday. I think it's probably because, again, looking for some type of high in the S&Ps. Actually, and Steve showed the wedge that we broke down out of, in NASDAQ, and while S&Ps were making another new high, NASDAQ failed to do it. So I'm not saying we can't pop one more time, but I tried NAS up here, and it was a good scalp, and I kept a piece. So we'll see. But the point I wanted to bring up is, when you like to go home on a Friday with these positions here. Let me just get rid of you guys for a minute. Okay, looks like we just had another one. Okay, you're up in gold from Grega. He's looking for 1795, so that would be a new low. I mean, a new high. And Blake's got a Euro Aussie on. Andre's long from 1700. This is an area that's going to be important to me next week, but Andre's got a nice lead here. Greg has got a nice lead. I remember when he was in last time, he liked cable better than Euro, but he liked them both. So a nice lead here. The point is, you could have these positions going home over the weekend. And, our hit rate's just a bit above 50. So, there are losers too. But why not join? Take some of the pressure off yourself. And you don't take these blindly. You look at your own charts, see if they line up, but they give you some pretty good entries and lines in the sands and targets. And then, go for the rationale and read about why they think things are going to happen, not just because you want to be convinced, but when you learn the whys of, like, Grega, why he's bullish, and see the wave count, or Andre is working a harmonic pattern. The whys will help you learn how to trade, okay? Not just participate in the trade, but if you spend time with their takeaways and their what formations they're looking at, what wave counts they're looking at, what kind of basic technical, real conventional stuff that I don't care what anyone says, it still works. Okay, so um, you could learn to trade by just paying attention to our traders and what they're doing. And if you like the trade, you go with it. And you know what? The position sizing here will give you kind of an idea of the conviction level, right? I mean, I would say that you have more conviction when you're putting on a full size than a quarter, right? So that gives you another idea. So, I guess the question I have here is, I'd like to do things live, and it kind of demonstrates what's happening here in phase. So I'm just looking for oh yeah, the chat here. You hope so? Well, what I would recommend to you, Didier, is, are you a subscriber?
Yes, he
You
is.
are. Oh, hi. Okay, great. So, you could get that in the chat room. Okay, Nick. So, these are reasons. Yeah, these are reasons for subscribing. So we share our work and give you the whys to teach you and hang out with you in the chat room to work with you. And you share a little bit of your money for our labor. Because I'm gonna just bottom line you right now, and it doesn't have to be us. You're either gonna pay to learn, or you're gonna pay the market. So there's no in between. What the ideal situation is, you do a little of both instead of a lot of either. Okay, so that's it. That's my speech for today. Okay, well, position sizing is basically a level of conviction, or you reduce position sizing, you trade with less leverage and more volatile conditions because you have to use wider stops. That's my explanation, Didier. Does that help? You asked in the middle of night for me? Please, please. You know, you could buy dolls nowadays. Okay. Anyway, good morning, Blake. How are you, buddy?
Good. This webinar couldn't be at better times in the of the day, because I'll tell you, most of the volatility happens when I'm trying to speak here on this webinar. When it does happen,
Really?
we're
Yeah, it's happening now?
yep, it sure is.
Yeah.
Let me get over to the screen here. Share screen. Yes. Okay.
Oh, and Gotham, if you're here, good call on the yen. I thought we had one more high. You were right.
So, the euro dollar is obviously exploding higher, and remember, this is end of month, so we're seeing the end of month flows that are coming through the market. I was hoping for some sort of dip in the euro dollar, didn't get it, and it's stretching its legs now. It is, and I've been playing the euro on the crosses, which has been working well, except they just slumped as this webinar started. You can see they've just pulled back a little bit, like the euro Aussie pullback. I'll show you actually the reason why, because you have the Aussie that is actually hitting new trend highs and just started like tripping stops, just a little, like I said, just moments ago. So we started tripping stops above the highs. As again, these are fixing flows that come through the market. So if it's the top of the hour, you're going to get some orders being pushed through the market, and this was probably a fix that happened right at it'd be 8 a.m. Eastern, which London would have been maybe a 1300 1 o'clock fix. And a lot of during the end of month, end of quarter, a lot of like hourly fixes happens. Like, okay, get this order done. It's got to be done by by this time, and then they just flush the market through. And that's probably exactly what we saw just moments ago, just some fixing flows. But that did push the Aussie above the highs. I want to show you something with the Aussie dollar. You'll notice the bull bear line right here. A bull bear line is a term that I've used for many years on the webinars that we used to do before here. It's basically a place where I'm bearish or bullish while above or below this level. And we use that term now with Forex Analytics, and we put in these bull bear lines, so you can say, okay, well, while we're above 107, which we are in the euro dollar, we're bullish. The Aussie dollar 66.66, which is currently where we're at. While we're below that, we're bearish. We start getting above that, we're bullish. Now, the bull bear line has been at this level in the Aussie forever, because I've had this drawn here. We all know that this is like a really key resistance. Now, does that mean, oh, we're above it, so I'm automatically bullish today? No, that means what we're doing is we're pushing some pretty key resistance right now. This bull bear line will get adjusted, depending on breakout today or the next couple of days. The Aussie bull bear line might actually drop to 65 cents or maybe 64 cents. I'd have to do some work here and say, okay, well, while it's above 64 cents, it's bullish, something like that. Or the flip side is, maybe the bull bear line gets moved up towards 70 cents and say, it can still move higher, but as long as it stays below 70 cents, we continue to be bearish. That's basically what the bull bear line is. And I wanted to explain that to you, just so if you guys are Forex Analytics subscribers and you see those numbers and you go, oh, what does that mean? It's, while above it, you're bullish, while below it, you're bearish. Generally speaking, obviously there's going to be counter trend moves and things like that. Now, I also want to show you something else that actually took place today that's not fix related. Well, I mean, it's all, I guess, fix related right now, but it's something that I think is really important. If you're trading either the euro or the pound, would be the euro sterling, the euro cable, the euro pound, wherever it is on my screen. Oh, here it is. So we completed the range extension today, guys. It is done. Bullishness in the euro pound is done. Now, does that mean it can't go up? No, but if you were long this currency pair for the last, however long you've been long it, this is the day you want to be out of it for now. Okay. So this is, just be careful if you're long the euro cable. And you could see
That was a great trade, that euro.
thanks. I don't want to say most of my month. I want to say probably half of my monthly profits this month
From that.
were from the euro sterling. I made a lot of money in this particular pair playing it. I played it on this move here, this move here, and then I bought it this week and did really well with it when it dipped back to 89 pence. I did not participate in the last couple of days worth of move, but you can see this update came out, a couple hours ago when the pair was trading at 90.35, and we're at 90.10 right now. But that's when I first got up. I noticed it and I said, "Hey, range completion is done. 127% extension hit with the move to the 90.50 level. Bull should be a little careful with longs near term." That came out, an hour ago. So, if
Blake, can I say something? It's amazing to me that, 1 million people don't pay $100 for this kind of edge every month in the market when they're risking 5-6 figures in the market.
Well, it's not. We're not going to catch everything, and I have to.
But I'm just saying the man hours, Blake. I mean, I try and do my work, and there's no way I'd be able to do what I do and what you do and what Grega does and what Andre and Steve do. Do you know how many man hours of technical work that is? No one person could do it.
Yeah, and that's the thing about having a team and a manual team too. A lot, I've talked to a lot of brokers that use some automated stuff, and lot of brokers are actually moving away from automated stuff because of the automated strategies do not have a lot of the human touch, which you need when you're in the markets, believe it or not. I mean, you can automate things to a certain extent, but there's a lot that is to be said for, having that human, finesse when you're in the market. And that's what we try to provide here at Forex Analytics. So, and it does take a lot of man hours.
In my more cynical days, Blake, I would say systems are for people who don't know how to trade.
Well, I think there's a place for system trading. I don't do it, but I can see a place for it. What I would be more frustrated with is being the person having to rewrite everything, because that's the thing about the markets, because the market's changing. You have to rewrite your algorithms. So it's like, why not just do it on your own? If you know everything in your head, I wouldn't want to do that. But that's hey, one other thing
goes in our head.
One other thing I wanted to talk about before Stelios and Steve get here is we have today we have Canadian we have U.S. inflation data today, right? We have Canadian GDP. We also have Chicago PMIs and stuff like that a little bit later today, but. With the Canadian GDP, I picked up a little bit of Canadian here, and I had a bigger order down at 05, but I picked up some just as we dropped below 137.20, and you guys should know the reason. We talked about this yesterday. Let me go ahead and explain if you guys forgot. 127% extension. 127% extension of this move. Okay. 127% extension of this move. 161% extension of this move. We had been consolidating right there, and because of the fixing flows, I was a little worried that we might get a push below channel support, which we did, but Oh, Dale, you weren't here yesterday when we talked about this. ADS in our chat room, and ADS, if you're listening, you should be along the Euro, US dollar Canadian as well. I'm calling you out because we talked about this on Wednesday in the chat room. And he said, I can hear Dale's voice right now. One more move down on this 3 drive, and it should bounce. Dale, are you here? Are you listening to that?
I think he stepped off for a few minutes.
Yeah. See, he stepped off again when I'm actually, not, I guess, giving him props just because of his coaching, Anyway,
commodity kidneys, as he says.
8 ADS said, thanks, Blake. I just got long 10 minutes ago, and that's in the chat room. And I said, and I'm thinking to myself, that's funny. That's exactly where I got into. And that what's great about that is ADS and I were talking about this in the chat room on Wednesday. So anyway, but I'm not too aggressive here because I am obviously aware here in the next few minutes we have this Canadian data, and I don't want, and also just knowing that there might be some more US dollar selling flows coming in, you have to be a little careful. And guys, you should not be unaware that there's US dollar selling flows coming through the market right now. We've talked a lot about this, the last couple of days. There's end of month dollar selling flows. Now, what we haven't seen yet is we are supposed to be getting equity market selling flows coming in at the end of the month as well. It's still early, so we'll see if that happens. Anyway, good morning, Steve and Stelios. I heard you guys a little bit earlier.
Good morning.
How you guys doing today?
Good morning.
TGIF.
Yeah, end of month, man. It's I'm ready for it. How are you guys? How are you guys doing?
Very good. It's end of month, end of quarantine, end of everything. We're opening up here.
End of month, end of quarantine. Yeah. Are you guys opening up in Greece?
Yep, and tourists apparently are going to be able to come from mid-June as well. So
wow, you guys have done really, really well as a country.
Yeah.
I'm jealous.
It makes sense. We have almost no cases anymore. I mean,
well, we can import them now, right?
Yeah, we can. We have hospital beds empty. Come be sick here.
It's a sad day in America when Greece closes us off to traveling to Greece, which actually might even be the case. Anyway. Yeah. Anyway, that's great, and I'm pulling for you guys over there. So
thanks, bro. So things are good. End of month today, like you said, I think there's a little bit of trouble brewing with the US and China. Trump has been tweeting stuff. Secretary of State Pompeo said that Trump is going to make a series of announcements on China. What is he going to do? I have no idea, but it's not just the US, actually. The Europeans also are looking into the way China is treating Hong Kong. The UK, Boris Johnson's spokesman said that they are urging China to reconsider regarding Hong Kong. I don't know how much further they can do. They can go from urging to actually doing something, but
Don't you think it's all political theater, guys?
Of course it is.
What's really going to come out of this the Hong Kong? I mean, yes, they may lose it may be a big event if you're in Hong Kong, obviously, but for the rest of the world, is it going to make much of a difference?
No, it's all negotiations, right? And this is tactics whereby there are countries like the US and the countries of the Eurozone who are supposed to be in quotes policing the world, right? And make sure everything is going on properly. There's no unfairness and stuff. And now what they're doing is, I think they're negotiating, and they're gonna ask for something. They take something, they give something, and then they let the Chinese do whatever they want. That's my view. I'm very cynical, but that's my view.
To be honest, Stelio, it would help if it would somewhat help if you were not supposed to be policing the country that is actually vendor financing your consumption.
Yeah, true.
Hey,
So yeah,
that's a good point. I did, I really quick, just because I'm gonna leave you guys here in just a couple minutes. I wanted to point out one thing technically. Just looking at this euro dollar, there's something that stands out to me, and I think that you guys should see. I'm not buying the euro here. I want to get past month end. And frankly, I think the euro could squeeze a little higher. And the reason why I think it can squeeze a little higher is if you look at this chart closely, you'll notice that we have these highs here from March, right? End of March. Just above that is the 618 retracement, which comes in, what's that, about 15, 20 pips just above at the 111.67 level. Look, if we get to 111, or we start breaking higher past this 111.50 level, and we make it to 111, let's say 70, don't be surprised if we just stop there. And as we trip stops above, anybody who's short has a bunch of stops right here, may not be looking at the 618 because they're looking at maybe this, which is the incorrect way to look at fibs, in my opinion. Okay. And I'll teach you guys about that some other time. But there might be people with a bunch of stops right here. And if those get tripped, I imagine we get to a 111.70. If you are on the long side, be very careful at that point. And if you're looking to get on the short side, maybe that's a good, counter trend risk reward. Take a 10 pip, stop, try to reverse it, and get it back down to 111. I personally, next week I'm going to be looking to buy on dips below 111, but I'm not playing it here, not the euro dollar per se. Okay, so anyway, I just want to bring that to your attention for those of you that are trading, especially going through this data that's about ready to come out. So guys, I want to wish you a great weekend. It is a normal weekend. It's not a long weekend, unfortunately. So that means we'll be back on Monday.
Yeah.
You have a good one, Blake.
Hey
good
guys,
weekend,
and
Blake.
Coach, you missed all my comments about the Canadian the last 2 days. I've been trying to every time I talk about ADS and I in the chat room talking about how ADS can hear Coach's voice on the dollar Canadian. You've been away. So anyway, I can't do it right now, but you guys have a great one. We'll see you.
I walked away to stop interrupting you.
We'll see you
I
guys.
have to walk away.
I'll see you guys on Monday. You guys have a great
right,
weekend.
buddy.
Steve Stelios, it's all yours. Coach,
too,
it's all
Blake.
yours.
All
See you
right.
guys.
Thank you, Blake. Thank you.
Hey guys, I know we have data, but this
We
is
do.
not political theater. Just like people underestimated the coronavirus as being, it's not going to be a big deal. This is a big deal with China. It's not political theater. We're selling arms to Taiwan. We were already in a Cold War, and sometimes Cold Wars can go hot. And in this era of COVID, where, people are, the United States is a little bit weaker with this going on. Look what happened in the streets in Minneapolis. I'm actually very concerned that sometime next year there could be a conflict, especially if there's a re-election of Donald Trump with Navarroism winning the day. And if you read any of Navarro's stuff, you wouldn't be surprised if an administration would take a stand against China that could lead into something very serious. And to me, it's not political theater. And you know what the interesting thing is, above all? There's actually bipartisanship in the U.S. for this behavior and actions against China. The only thing the Democrats and Republicans agree on is moving us into a war footing almost with China, which is pretty ironic to me. They only agree on one thing.
With that.
With what?
Good luck with that, because as Stelios said, I couldn't have said it better. I doubt that anything is going to happen beyond words. You know what I mean?
What I'm worried about is that when you have countries like US and China clashing, the potential outcome is total annihilation, right? So that's
Yeah.
the worrying part.
Well,
okay.
maybe not total.
Personal income,
Okay.
US
Yep.
personal income 10.5 positive versus minus
Wow.
6.5.
Are we sure that's not a negative number missing? Okay, anyway, a negative sign.
Yeah, back to the charts.
Okay.
Doesn't surprise me, Stelio. Isn't that
What happened the other time?
for the people that are employed, actually?
Yeah, could be.
Because think about it. Who were the first people that were losing their jobs, right?
Yep.
I mean,
that's true.
it's a statistical thing, because when you remove a lot of the jobs from the lower paid segments,
Yeah.
the median and the mean shift to the right, shift, to higher numbers.
Absolutely.
So personally, I'm not surprised at all having to do with it, to be honest.
Yep. Okay. Yeah, good point, actually. What else did we get? We got core PCE. Remember, that's the Fed's favorite inflation measure. Came in at 1% year on year, and this is dropping in line with pretty much all major other major countries. We had CPI actually. Yeah, go on.
Canadian GDP, by the way, minus 2.1 quarter on quarter.
Yeah.
Minus 8.2% annualized, and the month on month was minus 7.2, which is better than expected, because it was expected to be minus 9. US core PCE minus 0.4, which was slightly worse than expected. Personally, Stelio, I doubt any of that is really going to move the market. Perhaps the USD CAD might be affected, although so far I'm not seeing anything to write home about.
I agree. Okay. Well, we had some other numbers as well today. We had Eurozone CPI 0.1% year on year, so just barely positive and way below target. That's to be expected due to the lockdown and the effects of that. It's expected to rise, but as always, the question is how quickly and to what extent. The interesting thing is we're talking about GDP. Have you seen the Atlanta Fed estimate of GDP second quarter GDP for the US?
What is it? Minus 30?
They're usually very accurate. I mean, they're one of the best forecasting tools. Minus 40.4. So that's.
I was seeing some assumptions, and the assumption is that we might have a minus 40 quarter, and then in third quarter a plus 20%, and another plus 20% in fourth quarter. I'm pretty sure that those plus 20%, if they come into fruition, are going to be cheered by the market, which is of course funny, because assumptions and market was pricing in, let's say, a positive 2.5-3% year. Obviously, people can understand that even if we get a minus 40, plus 20, and plus 20, we're still not going to be back to where we were.
Yes, that's
and
true.
In my opinion, that's a big if. I can easily see third quarter being a plus 20% if we indeed have a minus 40%. But I think that the pace of recovery following that is not going to be as fast as they assume. So I don't think we'll rebound within 2-3 quarters to regain the economic activity that we had, which, even if that's the case, it will have meant a lost year at the very least, and a huge increase in debt. Which
it's still S&P's got your number. Did you do anything about it?
I did a quarter of a size at 3,050.
Okay.
And I have more higher if we get there. We might squeeze higher. I'm being very, very cautious with this, because you know what it's been like. It's just a juggernaut for the last few weeks.
Under 2980 seals it for me.
I agree.
Yeah. So okay, I was curious. Sorry, Steve.
Nasdaq still trying to hold here. It's been having some big days lately, without though managing to close
Make a
below.
new
I
high.
mean, yeah, I mean
It-
the day before yesterday, we had a huge move, didn't do much. Same thing yesterday.
We're barely higher on the week in NASDAQ compared to the S&P, still
Yeah,
being
listen,
up on the week.
this dark cloud cover that we had here, I think this was on a Tuesday, still hasn't been invalidated as a reversal candlestick because
right.
we've had like some violent days. We haven't been breaking down, but that dark cloud cover over there still hasn't been invalidated. Same deal with this ascending wedge, one way or another, meaning either breaking the bullish side or breaking down and closing below it. Which will open the bearish side, especially I think a daily close below 9,250 roughly.
Yeah.
That's probably going to be the nail in the coffin. And when that happens, I will be actively looking to fulfill the natural target of any ascending wedge, which is a full retracement back to the start of it, which in this case would
8,000.
mean 8,350. So yeah, that's what I think is happening here with the Nasdaq. I think that the S&P here is clearly on its last leg higher before a deep correction lower. That was clearly a triangle. So I'm expecting this trust to be terminal. Now we might have seen the high yesterday. We might need to push even a little bit higher towards the 78.6 at 31.37 before we see the high. So both of these can happen. At the same time, you can clearly see here that the VIX is still diverging, right? The VIX has in essence found solid support above 25, where we also find the 200 daily moving average. This looks like a descending wedge to me. We've had higher highs for quite some time, while the VIX has been
higher lows.
Posting higher lows. So I think that the VIX is another indication that something is likely brewing
so
here.
to me, Steve, would you recommend for my money, that I buy or sell volatility?
That's a big discussion how you want to play it. I mean, I really find no reason why you want to buy volatility and not sell an index, for example. So, depends. Each one has to weigh these things and make a decision how you want to play a pullback.
The problem with buying volatility is that you have to time it.
Time it very well. Yes.
No, this was a reference back to.
It has a brutal contango.
Yeah, this is a throwback to Steve during one webinar. He said, if I really didn't like a guy,
that actually we also put it in the video. That actually.
That's what I mean.
That was on the webinar 20th.
So I was just
February.
taking your temperature concerning me if you were going to tell me to sell volatility with the VIX.
No, I have to tell you. I have to tell you that honestly, I think the timing is once again good.
All right.
I think the timing is good. I mean, if somebody wants to buy volatility, I think the timing is great and the risk reward is amazing.
Pretty good. Yeah.
Yeah, I think this trade is going to play out within a few days, most probably. I think we're due for a pullback, and
go ahead. It's commencing, maybe.
Yeah, and I think there is even some chance that we saw the high this week.
If you're not a trader, but you have a 401k and you've had this kind of recovery in your 401k, you've recovered 30-40% from the bottom. Raise some cash. Raise cash.
To be honest, as
Most
Blake
didn't.
used to say in the past, I would pray in the forex gods, as he used to say jokingly.
Make a
and
sacrifice.
I would definitely de-risk here.
Yeah.
Definitely de-risk here.
Yeah. All right.
So yeah, even if you want to, even if you only want to be long, I think this is the place that you want to lighten up.
Yeah. Okay. Thank you.
I agree, and that's what I've done with my UK pension. So
Yeah.
Stelios is weak trading, not day trading, but he's weak trading his.
But his entries,
his UK pension.
his entries have been great.
Yeah,
I mean, his timing's been pretty good for a macro guy. I know you're the lucky macro. Right.
Yeah, I've been trading my UK pension quite actively over the last few weeks, and
yeah,
I'm just waiting for the leg lower to just go long again. But I think we'll get it.
If you keep on having this success rate, you're gonna soon hear from the pension fund asking you if you want to manage the whole thing.
How do I get in your hedge fund still?
Yeah. Okay, I don't have anything else to say. We're what else? We had some other data. Really, nothing major to talk about. So yeah, we can go to the charts if you want.
Blake already mentioned the Euro USD. If you remember, I had said that a daily close above 110.20 should lead us to 111.50. So we're now there. I agree with Blake. This is an area of resistance. Keep in mind, though, I would expect that once we see a sustained move higher in the Euro USD, you've heard the expression climbing a wall of worry, right?
Yeah.
I mean, so many people are bearish and are looking for opportunities to short the Euro USD, which when it starts really moving higher, I think that it's going to take a long time for the market. By market now, I mean market
don't you believe it
participants.
really is starting to move higher? I mean, I have to ask you something. Before it did it, you said 110 was so important. You're waiting to buy it until it closes over 110. What changed your mind?
Nothing has changed my mind. I just don't want to trade the Euro USD. There are better things to trade out there.
Oh, okay.
Yeah,
because you said that was important.
I do have exposure in the Euro USD. In essence, I've been advising people not to trade it.
Yeah.
And I haven't actively traded in years. But keep in mind that I switched 2 of my 3 trading accounts, which have a decent amount of money, from euro being the main currency to dollar being the main currency when the Euro USD was at 134.50.
Mm-hmm.
So in essence, I've been passively short the Euro USD with an entry point of 134.50. And I'm seriously contemplating in switching one of those accounts back to euros soon.
Mm-hmm.
And keep only one in of the 3 in dollars. Actually,
you're not the only one. I mean, Peter at the summit was very bearish the dollar, and then when we had him on this week, he said,
I'm very bearish the dollar long term. There's no question about it.
He said, be careful. He said, be careful about selling the breakdown. And I think part of his reason was looking for a correction in S&P and the dollar to go bid again during the correction. So I think that held him back from his.
That is exactly what would make me a little bit skeptical here in the very short term, because I can't at the same time be expecting a pullback in risk and Euro USD to explode higher during the same days. You know what I mean?
Yeah, I know.
So I think a great buying opportunity for the Euro USD ideally would be after we see a pullback in stocks and stocks bottoming out again. I think that's going to be an amazing entry price.
Yeah.
For Euro USD. So for example, if we want to visualize it in a way, something like that, assuming that, or we might pull back from earlier, assuming that this is the period that, stocks move lower, and then you see some signs that stocks are bottoming out again. Let's say let's take it in S&P terms. Let's say that the S&P has a sharp correction down to 2,700 roughly. Okay, somewhere there. And you see the signs that it's bottoming out and the pullback was corrective. That would be, I think, a great entry. Being short the dollar. For the time being, the dollar index is playing out exactly as we envisioned last week. Meaning, I said that, listen, this looks like a triangle that should break, in the direction of the previous move, but perhaps then we're going to have another, high before we go lower. Of course, keep in mind, there is always the likelihood that, you're going to see a big dump lower here, in which case that goes out of the window and then you're looking, for an impulsive move lower. So I still think there is a chance that we're going to find the bottom here in the DXY and push higher one last time to do something like that, let's say. Right? But if I see the move lower being very aggressive, I'm going to change my mind about that. And I'll have no problem chasing the dollar lower, because fundamentally speaking, my bias is for a much, much lower, for a much weaker dollar in the months and years ahead. So I'm not going to be really afraid chasing the dollar. I would be afraid to chase the dollar to the upside, but I would definitely not be afraid to chase the dollar to the downside if I really believe that it's beginning. You know what I mean? I am short the dollar since some time ago, and I'm very, very deep in the money in USD NOK, for example. So I do have a dollar position here. Speaking of it, since it's a commodity currencies, you remember, Dale, we mentioned yesterday, you remember that I said yesterday that this looks like a triangle to me in silver, and that would imply another move higher. That's already happening. Silver is at higher highs, and gold is poking its head above this descending channel, which increases the likelihood that this was another corrective pullback. So, if we are to see a move lower, I think from what I'm seeing so far, there is a very high likelihood that it's going to happen from higher prices, from a higher high.
Yeah, I could see that that's possibly just a 2 up there, and we need one more. I was thinking about that when I was looking at the charts. You see the high in April is 1, and then the high in a month ago in May is 2, and then we'd have a 3. But look how long we've been making new highs. This is daily, yeah. Since the last confirmed high goes back to the beginning of the year. So that might, so that might do it up there for, and then get a big correction. I could see that, Steve. In fact, that's Grega's target for his long on a pattern in play up there.
Don't forget though, you know how much I love Grega, and I consider him one of the most talented Ellioticians out there. There's no question about it, and that doesn't change that fact. Don't forget that Elliott Waves always has alternative counts as well. I remind you that, for example, Peter Goodburn, which is an excellent Elliotician as well, he has a different outlook having to do with metals. For example, he's expecting a pullback as well, but I think he's expecting quite a corrective pullback. And what was his target? Something like 2,500, if I remember right from yesterday, the day before yesterday that we had.
You mean his upside target?
Yeah, in gold. I think if I remember,
I think it was 2,200, 2,500.
No, 2,500. I think was his upside target. Yes.
Like 25 silver.
Yeah, and 25 silver, which just a small. I didn't want to interrupt him. $26 in silver is super critical resistance. So that goes well with it, because 25 can easily be 26, and 26 is a key area of resistance. But imagine, even from where we currently are, to go to 26, that's a huge move higher, right? Huge. In silver, huge.
I think you'll be able to buy it under 15 first before it goes to
that
25.
Would be a gift, if you ask me.
Well, markets, if you're patient, there are gifts under the Christmas tree.
Of course there are. There are opportunities. There are amazing opportunities. And speaking of precious metals, there was no better gift and buying opportunity than that dump in the GDX. You remember that happened?
Spano bought it that day.
That happened mid-March. I mean, that was unbelievable. The fact that you had the ability to buy the GDX at prices historically seen only for very short periods of time. You can go back and see.
That
You
was
know,
the quickest rebound.
yeah, I mean, just
Look at
look at
that.
this.
Yeah.
I mean, that scared the hell out
done
of
in a day.
everybody. Everybody dumped whatever they were holding, being
And it
really
doubled.
afraid. And within 44 trading days, it has moved higher by 133%. Just think of that. And by the way, speaking of which, I think this might be another buying opportunity here. If you remember,
Yeah.
when we were breaking out, I said that this is a key support resistance area at 31, 32 GDX. And if you see, in essence, this week we
And pulled back to the breakout.
what the hell is this? That was weird. Yeah, we pulled back to the breakdown.
Breakout.
Yes.
Yeah.
Yeah.
Breakout.
So yeah, that might have been it in this case as well. So I wouldn't be very much surprised. Now, I wouldn't also be surprised if we, fool people once again. Meaning, many people might have their stop losses. Many of the weak long hands might have their stop losses here. So you know how the market is. I wouldn't even be surprised if, they take them to the cleaners once again by, pulling back lower than 30, a little bit lower than 30, before we can actually find higher levels once again. But in any case, I think that the GDX still looks rather good. I mean, after a move of 130% higher, yeah, of course you're going to see some pullbacks. There's no question.
Well, have a good weekend, bro. No, go ahead. Answer a few questions for
okay, let's
our faithful,
see.
our
Steve,
faithful
do you use
faiths people.
harmonics? A short answer: no, I do not use harmonics, Phil. We have Andre.
You use
though.
Andre.
Yeah, we have Andre though that is very good in harmonics. That's
Yeah.
why we
Show
we
him
do
an
believe
Andre
in.
chart. Show him an Andre
Yeah.
chart.
Sure, absolutely.
Hey, it's like you and I have a talk show right now. I'm Johnny Carson.
Let me actually, I have it ready.
And you're Ed. What was his name? Come on, guys, help me.
Harmonics. There we go.
Ed McMahon.
So let's see.
Yeah.
You see?
Thanks, guys.
You see, he was
Yeah.
targeting higher earlier on. And this is a longer term chart. His weekly chart was targeting, since we were testing the 106 back at 120.
Yeah.
Yeah.
And he's got a method to just the patterns, how he approaches it and everything. So, you could learn from Andre.
Absolutely. That's why we have him.
Yeah.
Okay, let's see. Let me go through some questions from the beginning. DXY, we already had a look at it. Is the USD CAD setting up for a further breakdown? Listen, having to do with the USD CAD, I think that there is a good chance that we're going to see 136 before higher. And so far, this looks to me like a consolidation. We've broken down from 138.50, which was not a surprise because I had said in advance that if we don't hold 138.50, I think we're going to see one more leg lower towards 136 before higher. And I think that's what we're doing at the moment. So I'm very skeptical about finding a low here. I think 136 is a much better area to look for one. And I wouldn't even be surprised to even make it lower to like 135.50, even to 134.30. But I do believe that USD CAD is not done moving to the upside. So I'm still viewing this as a corrective move. And personally, I wouldn't even consider buying it before we hit 136. That doesn't mean that it has to go to 136, but in my mind, there is a high likelihood that it's going to test 136 at least before higher. So that's what I think about that. Talk about Euro USD. We did that. I'm looking for $20 in silver over the coming weeks. No disagreement. It is extremely likely. There's a question about euro pound. Listen, having to do with euro pound already, Blake showed that we did complete this rectangles target earlier today, and that's true. So far, the day isn't moving nicely for the bulls, meaning we completed the target. We even overshot the target. The candlestick so far is, not looking that healthy. I want to see how we close the day, because I wouldn't be surprised if we have found now an interim high here. I remember that Gregor was also looking for this rebound to fail. I have no disagreement with that, since, as I said, we fulfilled the rectangles target. So I would definitely be very skeptical in being long now. I was asked again earlier in the week, and I said that, listen, as long as we trade above 88.50, which was the breakout area, keep looking higher. But as I said, now that this target is fulfilled, I would start being more careful with that. Speaking of which, another pair we've been talking about, which is the euro yen. Now, be careful here also, because we've now started testing this triple, quadruple confluence of resistances roughly at 119.60. So, moving higher from here, directly from here, might be quite tough. We might see a pullback first. Even if the pair wants to move higher, I think we might see a pullback or a consolidation near that area before we can even consider higher levels. And needless to say that from a risk reward perspective, being on top of this confluence of resistances, if you really want to do something now, I mean, if you can't hold yourself and you want to trade it now, the only direction that it would make sense would be to the short side, right? Because you need to risk very little to see a pullback, even if this is the beginning of a much bigger move higher. Nothing moves in a straight line. So keep that in mind about the euro yen. Now, having to do with the cable, nothing has really changed here. We're back testing again and again and again this head and shoulders neckline, broken head and shoulders neckline. We're back testing it as a resistance. So what can I say? Be careful here. I mean, there is a chance that we're going to fail and we're going to move lower. Let me go
Gregor's
through
long.
more. Yeah, I know Greg is bullish, but you know how it is, Dale.
It's all about time frames.
First of all, it's all about time frames. Second of all, if I traded what my partners see or what my associates see, I wouldn't be a trader myself. You know what I mean?
Yeah.
Now, I know that frequently Greg is going to be right and I'm going to be wrong, or vice versa. But, I have to be an independent thinker. You know what I mean?
Yeah, I know.
So I'm not saying it
I
can't
used
move higher
to have
from here.
I used to have a big ego too.
Yeah, I mean, I'm not saying that it can't move higher from here, and
Yeah.
I'm not short, right? So I'm not
Yeah.
fighting that. I'm saying that evidence, in my opinion, are still not
You
conclusive.
want more confirmation.
Yeah, not conclusive for me
Yeah.
here.
Okay.
What about 90 being support? Now that was resistance. You're referring to euro pound, I'm assuming. Yeah, the 89.50 area can be support. Yeah, it's the first area of support, and the next area of support is going to be this 88.50 breakout area. But if we invalidate that, 88.50 look much lower, if you ask me. So we might see 110 again. Yeah, we might. Ingmar is asking. We might see Euro USD 110 again. We might backtest it as support this time. I wouldn't be surprised. Hi, Steve. Need your recommendation here. Looking to long-term strategic investing ideas, 1-2 years holding period. Can you suggest any currency pairs? I actually did that, and I actually tweeted that. I think very nicely timed. I said that, weeks ago. I said that silver, gold, NOK, Russian ruble These are long-term recommendations I had, and so far they're playing out very nicely. I'm also very bearish the dollar, obviously. I was very bullish crude, and I'm still bullish crude, but I think we might see a pullback from here. But if you're asking for a long-term horizon, I think that crude is going to rebound a lot more. Keep in mind, since we're talking about crude has perfectly fulfilled my target, which was at 29. And as you see, this area has been giving crude trouble in, pushing through. I wouldn't be surprised now to see a pullback from here. I'm not saying it's necessarily the case that it will happen and see a pullback all the way back there, but it can happen. So definitely, I don't recommend buying crude on top of this resistance. Now, we might just spend a little bit more time consolidating horizontally here, in which case we might move higher without seeing a deeper pullback. If that's the case, look for $34 to be the next upside resistance. But just to let you know, in the short term, I think being long crude here makes no sense. And this is the right time to start accumulating. If it's the right time to start accumulating, it was a better time to start accumulating those when I first mentioned it some weeks ago. But in the long term, I think that it's still they still offer good prices. Yes, I think they still offer good prices. Now, I wouldn't be buying gold up here. We're seeing so many divergences, but I would definitely buy gold and silver in any decent pullback that we see. I think that buying the Russian ruble and NOK even after these pullbacks still makes sense. I think they're going to do very well during the next few years. What's your opinion on USD Swiss? I've already answered that. I would be very enthusiastic about the USD Swiss moving lower from this triangle. You can see it here. If at the same time, and I had mentioned that last week and earlier this week, we didn't see a legitimate breakout in Euro Swiss. And keep in mind that as long as Euro Swiss is breaking out higher, that means that the potential for lower move in USD Swiss is reduced in comparison to the upside potential of the Euro USD. So bottom line, if the Euro Swiss remained somewhat pegged, I would have loved to perhaps even participate in this trade. But given the fact that Euro Swiss is moving higher, that reduces the reward potential for being short the Euro USD Swiss. So, I would rather be long the Euro USD than being short the USD Swiss at the moment. Okay.
What about Hong Kong depegging from the dollar during this crisis? And US dollar yuan looks set to break out and accelerate, doesn't it?
Yeah, we already talked about it. I mean, yesterday
market
or
hasn't cared about it for a long
there it
time.
is.
Yeah.
There is the all-time high. We tagged it to the pip the day before yesterday. But to be honest, even yesterday and today as price action, it's just an inside day to an inside day. So, I mean, I think that the path of least resistance is
740-ish, yeah.
Now,
how's the market going to like that?
Yeah, I think we can see this type of a move, yeah.
Yeah.
You know how the market is thinking, Dale.
Yeah.
For a period of time, it might think that there is no problem as long as the Fed is printing $1 trillion per month on average, right?
Yeah.
So the market is is and remains and has been in the mood that
there's different tipping points. It doesn't matter till it does. And move to your 1.618 target. There's no doubt in my mind it's going to matter. Not the way it mattered before, maybe less in magnitude, but it's going to matter.
In any case, as I've said, I think for those that have eyes, it was more than obvious even before the escalation of coronavirus and all the rhetoric around China. It was more than obvious that the US-China deal was dead. China was definitely, even before that, not fulfilling their committed buying pace to reach the 200 billion. So I think that even if we didn't have coronavirus, we wouldn't see this deal really move forward. Only the fact that they had to segment it in tranches just to not show that it's failing, in my opinion, was evidence enough that the deal was actually had no chances.
Where's Marco Polo when you need him?
Bunch Treasury is ready for a new leg higher. Listen, that's a good question, and I'll tell you what. The treasuries, I mean, just look at this. This is not normal. This is not a natural move, right? You can see this.
It's like a dead market.
It is a dead market. It's a market that has flatlined. Now,
they took it away from us.
Yeah, from a technical perspective, the chances are very high for another move to the upside here.
Yeah.
And that would clearly go very nicely with a risk-off move now.
Yeah.
Right.
Right.
Now, having to do with the Bund, and this is one of the. If you remember, I actually mentioned
they've been diverging for a while.
The two of them, and saying how much they've been diverging, and if this divergence had to close in FX through FX, the differential, the interest rate differential had to close. The Euro USD might move to 125 or so, and you can clearly see the difference here. The Bund not only isn't testing the all-time highs, but from the all-time highs, it produced a move lower, then a corrective rebound, and we're likely breaking down now. So you can see there is a big difference here between how the two of them look. I'm not saying that the Bund is like, no-brainer bearish, but I'm telling you that there's no comparison in how the two charts look. One of them, I mean, is at all-time highs.
Yeah.
And consolidating with a very high probability of a break higher, while the Bund, if I had to guess the next direction, I would say there is a little bit of a higher chance for it to be lower than higher. So, even by judging, even by seeing that, it's easily, you can easily draw the conclusion that the path of least resistance in Euro USD from interest rate differentials is probably higher.
We talked about that after that first breakdown and the recovery. Yeah. Lead on the way up, lead on the way down.
Indeed. So let me do this as well. Iron ore for a friend here. That's for Joe actually.
Copper.
Are you sure that's the ticker, Joe? Doesn't work for me.
Yeah. There it is. FE. I saw it. FEF. FEF.
FEF1?
No, just FEF. It's right there.
Look at that breakout today.
Wow.
Huh. Quite an
gap higher, and it looks like it could run all the way up towards that gap on the left side. There's a lot of room for that to run.
Yeah, quite.
Why are you following this, bro?
Because it jumped out at me.
Okay.
I saw the chart.
You're in a scrap metal business.
It's above 100.
My relatives were in Chicago, scrap metal. Nice.
Yeah, Joe, undoubtedly, it's quite an interesting move here. Yeah, I mean, looks good.
Very bullish.
Going for new highs.
It's really overbought on the RSI, but there's no reason it can't keep going.
Yeah, this is a nice gap here.
Is there a problem with mines, or it's just like demand came back, or?
I'm not really sure why. I just saw the chart and saw that it was breaking out.
That's all you need to do. Reporters have to say why after the fact. So yeah. Nice look, man.
Okay.
So anyway, just wanted to point that out there.
Thank you. Actually, that was a good suggestion. Indian stocks, Indian Oil Corporation, TIOC.
Have a good weekend, Joe.
You too, guys.
Nifty. Bye-bye, mate. USDTRY, clearly had a nice move lower from the all-time highs. Keep in mind, USDTRY has been in a non-stop move higher for 12 years or whatever. But I think that at least we should see another leg lower. So I wouldn't be surprised to see something like that. So I think that in the short term, USDTRY might be a nice short-term short from like this zone or whatever. Okay. So that answered that question having to do with the Nifty. And we will wrap it up from there. Here's the Nifty. Here's what I drew like last week or the week before that. I said that this was a critical key support, and what happened from there would be important. We're seeing another leg higher, so I wouldn't be surprised to see, 1, 2, a third move higher, 10,500, which is also support resistance area, and the 61.8 would be a nice area of resistance. I would be looking lower from there, but keep in mind that this area that we're now testing is also a nice area of resistance, 9.6, 9.7K. So be careful here. If we break through that, I think we can extend towards 10,550, but I think it's not going to be easy to move higher from there. Natural gas, and I think we wrap it up after this. Here's natural gas still trapped in this range, okay? Still diverging in the long term, so I think, that there is a good chance that we've seen the low.
I'd like to see it flush one more time.
Yeah, we might. That's what I want to say. We might trick everybody and produce a short-term lower low and get everybody bearish. But I think that even if that's the case, even if we push lower, it's going to be just a fake move from the market before we see a much bigger move to the upside.
Happens this summer.
Yeah, so I think in any case, the next big move for the natural gas, whenever it comes, is going to be to the upside and not to the downside. Now, for the time being, respect this range, $160 to $2 roughly. And, there's not much to do within this range, unless you want to be trading in the range. I mean, every time we go close to resistance, selling it. Every time we go close to support, buying it. I think that, when we see again a legitimate break above $2, probably then natural gas is not going to be turning its head lower again. It's probably going to extend higher quite violently. That's what I would expect the next time we see a daily close above $2. Okay, Dale, that's it from me.
Good job this week, Steve.
Have a wonderful weekend.
Everyone have a great weekend. Don't forget to sign up, navigate, get ready. Your best trades for next week are done tomorrow. So prepare. I know I will be. And have a great weekend and stay healthy. And we'll kill it next week, like every other week. So see you, my friends. Have a good weekend. Enjoy your 8 walls, 4 walls, whatever you have. And yeah, it's fun. It's fun hanging out with everyone in here in the room. I hope you guys, besides learning things, have a good time hanging out with us. So remember, don't just count your pips, count your blessings. See everyone on Monday. Adios.